Now, while stock markets have generally been in a rally mode since Christmas, Bitcoin is back below the $4,000 mark. Joining me now to talk Bitcoin and blockchain is Gary Markham. He is the CEO of aXpire Fund Solutions. Gary, good to have you on the show with us.
Thanks, Michelle. Thanks for inviting me.
So Bitcoin today at $3,628. As a recap, in December of 2017, it was around $20,000. So many are very concerned that this cryptocurrency bubble did in fact happen. But what is your outlook?
The cycles are very similar to, in fact, gold futures. If you look historically at those and you stretch them out, or you compress Bitcoin in the same fashion that you looked at the length of gold futures, they're ironically very similar. So we're expecting a similar pattern to happen. But the crypto trading markets are highly influenced by technology, bots, whalers, influencers that have a major impact on the entire indices. So it's not just Bitcoin. You'll see the entire cryptocurrency stock portfolio or cryptocurrencies head south, head north, stay stable. That's very unusual. That's manipulation.
All right, but you could argue that you're seeing a lot of that quant activity and algorithms play out in equity markets as well.
Correct.
So in terms of the amount of ICOs that we were seeing, there is a reduction now. Are we coming down to realizing that there isn't enough room in the market for dozens and dozens of cryptocurrencies? And are we consolidating to just, what, top 10, top 5?
I think, again, the nature of different cryptocurrencies lend themselves to, is something going to be a currency? For example, the Fed, it's not on the books, but they said that Bitcoin and Ethereum are currencies. Others are utilities or securities.
Right.
In the U.S., in fact, there's no such definition as a token, as a utility. Everything is a security. Whereas overseas, things can be both a utility and a security. So you have this juxtaposition.
Well, explain what that means. What do you mean by a token, by a utility?
So,
as opposed to a security.
So a cryptocurrency is effectively a digital currency which is created through a smart contract. That creates what's called a token or a coin. Now, some of these coins are traded openly, like cryptocurrencies, like like Bitcoin, like Ethereum, like EOS, and these others. And they're traded actively like you would trade a stock to make profits, hopefully, or losses if things go south. But then there's, of course, tokens that are created through ICOs, initial coin offerings. That's a term now that's being used less often. We're now seeing a security token offering, an STO. I don't know if you've heard that acronym. But things are more, because of regulatory pressures, everybody wants to do the right thing. So security token offerings are more the flavor these days as opposed to ICOs, certainly in the United States.
But the overall trend is here to stay.
I think cryptocurrency trading is going to be here to stay because cryptocurrencies are going to be here to stay. I think there'll be a big shakeout amongst different cryptocurrencies. Some will become de facto currencies. Some will be for example, banking. Some will be for infrastructure. Some will be used for different types of technologies or different parts of...
And is Bitcoin likely still the leader in this space?
I'm not predicting that it's not going to be the leader.
Okay, we'll keep it safe. Now, one of the big things to come out of the whole cryptocurrency and Bitcoin phenomenon is, of course, blockchain. That is the open ledger technology that allows all the parties to keep track of what's going on. Why has that technology been so revolutionary, not just in the crypto space, but elsewhere?
Right. I think blockchain technology is here to stay for quite a while, sort of pre-quantum computing. And even with IBM's recent announcements about quantum computing, it's going to be a while before we see that in our daily lives. But blockchain technology, distributed ledger technology, peer-to-peer, is very helpful for things like financial transactions. It removes intermediaries. So, for example, if you're using a credit card or you're paying with a check or using any kind of transaction online, there's intermediaries in that process that are taking their fees as your money moves through. Well, in peer-to-peer, using blockchain, you can remove or disintermediate that process, which means you can reduce the costs.
So what are the other applications that we can see for blockchain technology beyond the financial sector?
We're seeing a lot in health tech. We're seeing a lot in fintech. We're seeing a lot of IoT, so infrastructure, logistics, even other things like documentation, title deeds. So stamping something as its verification or its veracity as the correct piece of document that's representing, say, a title of a home or a building. We're seeing art also being used. We've seen a lot of fraudulent activities in the art world.
So if someone wanted to take advantage of this growing trend, what's the way to invest in blockchain?
I would do your homework like anything. I wouldn't necessarily believe a lot of what I read online. I would take advice from those that are already in the space, and I would make sure that I invest only a small amount to begin with. But in terms of the blockchain space, I think it's definitely here to stay. It's technology that's going to stay with us for quite some time. And you and I and individuals are going to see this personally affecting us, not just through payment processes, but also through healthcare. We're going to see a big health tech play with blockchain.
All right. Thank you so much, Gary Markham.
You're very
Good
welcome.
to have you
Thanks,
on
Michelle.
the show.